Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 440 on August 14th, 2026. I'm your host, Eric, and in this week's show, we will cover the trades from last week on Hertz Global Holdings, the Direxion Daily MSCI South Korea Bull 3X ETF, SoundHound AI, and Ondas Inc. And we discuss 4 new trades on AMC Entertainment Holdings, New Era Energy and Digital Inc., Cleanspark Inc., and Applied Digital Corporation. Now, it's always great to hear from listeners. If you have any questions about the trade presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them or visit the YouTube channel for the Weekly Option. Now, the markets finished the week with very little change. The Dow Jones Industrial Average lost 304 points, closing at 53,732 points. The S&P 500 index inched 28 points higher, ending the week at 7,785 points. And now it's time for the topic of the week. And the topic of the week this week is running out of time, a common theme. Have you ever been right but wrong at the same time? I sometimes will trade 0 DTE options, which means they expire the day of, and my trading style uses momentum changes to define my entry and my exit points for trading. And I like using options that expire that same day because they tend to make the biggest moves for my trading style, but I definitely have been both right and wrong at the same time, meaning I was right on the direction, but I still lost money on the option. Sometimes you can just run out of time. What does that mean? Time until expiration is built into the price of every option. And when you buy an option, that time value is constantly working against you. If the market literally doesn't move at all, the option you bought would be worth less an hour or a day after you traded it. Sometimes the underlying market will go in the direction I want, but not move enough at the right time to allow me to make the profit that I wanted. With every minute that passes, time value is being removed from those options. It's like it evaporates. And the longer the option stays out of the money, the more likely it will expire out of the money. I might start getting the move I anticipated, then literally run out of time. Or the market moves to the price you anticipated, but you hardly make a profit because the time value just evaporated from the position during the course of the move. It just took too long. Time always is a factor in option trading. Do what you can to make sure your positions don't run out of time. Now, one way to combat this pressure is to trade spreads rather than individual options. That way, the time value lost from the option you own is somewhat offset by the time value in the option that you sold. Time value is noted by the risk metric theta, so keep an eye on your theta as you're trading so that you know how changes in time are affecting your overall position. So that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We're going to start off with our covered call on Hertz Global Holdings, symbol H as in hotel, T as in tango, Z as in Zulu. At the time, the stock was trading for $2.26 per share. I looked at buying stock and selling the August 2.5 call at 29 cents, hoping for a return of 23.45% in 2 weeks. Well, shares of Hertz lost 3 cents, ending the week at $2.23 per share. The call option we sold lost 21 cents, leaving us with a profit of 18 cents if we were to close the trade out immediately. Now, with 1 week left until expiration, the main question is whether or not you want to keep the stock or close the trade. The weekly profit you would make by closing the trade early is only a third of what you would make if it went in the money. As well, you can let the option expire totally out of the money and then sell another call option in September. This would increase the total return on the trade, but it does keep you in the position longer. It all comes down to personal preference at this point. Still, the stock price is above the break-even price, so we are making money on this trade so far. No adjustments are required at this point. Next up, we have the cash secured put on the Direxion Daily MSCI South Korea Bull 3X ETF. Symbol K as in Kilo, O as in Oscar, R as in Romeo, U as in Uniform. At the time, the stock was trading for $17.36 per share. I looked at selling the August 17 put at $1.90. That could give us an 11.18% return on capital in 2 weeks. Well, shares of the stock jumped $4.26, ending the week at $21.62 per share. The out-of-the-money put that we sold is still really out of the money now. The put can be bought back for 30 cents, allowing for an immediate profit of $1.60, or that's $160 in real terms. Or you can hold the option another week, hoping the stock remains above $17 per share so that the put expires fully out of the money. This trade also has worked out as planned. No adjustments are needed. It's just a matter of figuring out if you want to hold the put until expiration or go ahead and take the money off the table. Next, we have the credit spread on SoundHound AI. Symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. At the time, the stock was trading for $8 per share. I looked at selling the August 8 7.5 put spread at 19 cents, giving us a maximum possible loss of 31 cents per spread. Well, shares of SoundHound lost 57 cents, ending the week at $7.43 per share. The out-of-the-money put spread that we sold is now in the money. And the stock price is also below the break-even price, so you have a few decisions to make. The first thing we would normally do is create an iron condor by selling a higher strike call spread. Now, with 1 week left until expiration, those spreads are not capturing much value, so it really won't help the position much. You could sell the 7.5 8 call spread at 14 cents. That would mean that you sold the 7.5 8 box at 33 cents. That locks in a 17-cent loss, which is a little more than half of our 31-cent maximum loss from the start of the trade, right? So that does at least lower your loss, but it locks it in when you do that. Now, you could also roll the trade to another month to reduce the loss. For instance, you could buy the spread back for roughly 38 cents and then sell the September 7-6 put spread at 60 cents. That keeps you in a position longer and at least allows you to move the spread to the next month so that maybe you have a chance to actually make money on it this time, since this one is moving against you with just a few days left until expiration. And finally, of course, you can do nothing and see how the stock moves this week. The maximum loss was known at the start of the trade, and you can always chalk this one up as a loss and keep it moving. So it's totally up to you. You can make a move, you can roll it, you can do all sorts of things. So much of this risk management and trade management just comes down to individual personality and choice. And our final trade from last week is a debit spread on Ondas Inc. Symbol O as in Oscar, N as in November, D as in Delta, S as in Sierra. At the time, the stock was trading for $9.11 per share. I looked at buying the August 8.5 9 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 2 weeks. Well, shares of Ondas grew 11 cents, ending the week at $9.22 per share. The in-the-money call spread that we bought is still in the money. The stock price is above our break-even price, meaning we are making money on this trade. Now, I'll keep an eye out for any adverse stock moves over the next week. So far, so good. No adjustments are needed on this one. So that's it for the review of last week's trades. We are 1 week away from August expiration on August the 21st. It's funny, as an option trader, I tend to live my life options expiration by options expiration. It's kind of funny. Now, all new trades on today's show will use the September 18th expiration date for monthly options in September. So let's get it right now. Let's dive in. We're going to start off with our covered call on AMC Entertainment Holdings. Symbol A as in Alpha, M as in Mike, C as in Charlie. The stock ended the week at $2.49 per share. I'm looking at buying that stock and selling the September 2.5 call at 25 cents. That could give us a return of 10.44% in 5 weeks. Well, you enter this trade by buying stock for $2.49 and selling the September 2.5 call at 25 cents. This trade makes the most money if stock prices finish above $2.50 per share. The break-even price on this trade is $2.24 per share. In real terms, the stock purchase will require $249 and you would collect $25 for selling the option. Next up, we have a cash secured put on New Era Energy and Digital Inc. Symbol N as in November, U as in uniform, A as in alpha, I as in India. The stock ended the week at $5.06 per share. I'm looking at selling the September 5 put at 90 cents. That could give us a return of 18% on capital. Now you enter this trade by selling the September 5 put at 90 cents. This trade makes the most money if stock prices finish above $5 per share. The break-even price is $4.10 per share. In real terms, you'll collect $90 for selling the put option and you'll have $500 locked up in case you need to purchase the stock. Next, we have our credit spread on Cleanspark Inc. Symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. The stock ended the week at $12.08 per share. I'm looking at selling the 12-11 put spread at 41 cents. That could give us a maximum possible loss of 59 cents per spread. Now you enter this trade by selling the September 12 put at $1.09 and concurrently buying the September 11 put for 68 cents. This trade is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $12 per share. The break-even price on this trade is $11.59 per share. In real terms, you'll receive $41 per spread that you sell and have $59 at risk. And our final trade on today's show is going to be a debit spread on Applied Digital Corporation, symbol A as in Alpha, P as in Papa, L as in Lima, D as in Delta. The stock price ended the week at $31.20 per share. I'm looking at buying the September 30-31 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that would be a 53.85% return in 5 weeks. Now you enter this trade by buying the September 30 call for $3.90 and concurrently selling the September 31 call at $3.25. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $31 per share. The break-even price on this trade is $30.65 per share. In real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. So that's it for this week's show. Thank you guys so much for following. Thank you for listening. Hey, if you've never written a review of this podcast and you enjoy it, only if you enjoy it, leave me a great review. I have several 5-star reviews out there. I'd love to get another one. And if you're listening or watching this on YouTube, definitely hit the like button and subscribe to the show just so that you get it again next week. So thanks for listening. Thanks for sharing. I hope you guys have a great weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.